In this week's episode of the Stockscores Market Minutes, I'm going to take a look at how to trade market volatility, whether it's a volatile overall market or volatility in a liquid large cap stock. Plus, I'll do my regular weekly market analysis and look at the trade of the week on CRM. All right, let's get into this week's topic. So stock market volatility has been abnormally high of late, and that means there is an opportunity to trade in and out of the market with the volatility. You can take the same things that I'm going to show you now and apply them to liquid, actively traded, volatile stocks as well. But we're going to focus on the market with this analysis. So when the overall market has been volatile and really presents an opportunity to trade it in the short term. And what we want to do is use intraday trend lines to identify the next leg of the move. And we can do that in two ways. One, we can look for trading with the change of the trend. And two is when the market is overbought, we can short the market. And when it is oversold, we can buy it. So I'm going to show you the intraday chart of the S&P 500 going back a month. And we're going to draw a trend line on here to start. There's our downward trend line. So as long as we were in this downward trend line, it's heavily, really a short market and not one that we would want to be buying, except when it gets oversold. So anytime price runs down and away from the trend line, we can look for opportunities to buy it. So there's a little break from a rising bottom and the market moved up. Then here again, we were oversold and then we started to move up through the high of the day, buy that up until the trend line. And you can see over and over again, there's these opportunities to buy the market as it moves up to the trend line. And then once it gets to the trend line, you want to look at shorting it again. Now, here we had a break of the downward trend line. So now that's a change of trend. And at that point, we can think about going long for a multi-day trade. And that has worked out fairly well. But again, along the way, we could define a trend line and say, here we're a little overbought and the market has pulled back to the trend line, and it's actually gone through it today, and I'm not sure if that indicates we're going to have a rough week next week or not. I'm not quite ready to say that because it broke down without pausing at the trend line. Usually you hit the trend line a few times before you break it, so we'll see if this is just a bit of a sideways move. But to get the concept here, what we're trying to do is, first of all, define the trend, look for your inflection points, and draw a line through them. That's your trend line. And then when the market runs away, look at buying. And when it gets back up to it, look at shorting. And now we're in an upward trend. The market runs away and pulls back, runs away and pulls back. And we'll see that over and over again. Now what we want to watch for is a decisive break of the trend, perhaps sometime next week. All right, let's get into this week's market analysis, starting us off with the US markets. And this, again, is that chart of the S&P 500. I've done it on an hourly basis here. And I'm going to draw this trend line just kind of across these bodies. It's probably more accurate. Let me just try to get this right here. It's a little bit difficult. So I would say that that is our trend line right now. And so there's the top of our channel. And, heavily overbought here, running really far away from the trend line. Now we're pulling back to it. Haven't really broken it yet. Now in the shorter term sense, we had this little trend line, but I don't think that's quite long enough to call a trend. I like to look for a trend line that touches as many points as possible, and we'll probably come back into here and touch that maybe next week. So still a little bit of a choppy trend line early in that process. The reality though is that we did break the downward trend, and so the buyers are back in control, but it feels like they're quite uncertain, and so I wouldn't have a tremendous amount of confidence in buyer strength just yet until we can get a little bit more of a sustained trend. Now looking at the longer term chart, the weekly chart, you can see that we broke the weekly time frame and we're now coming back up to that trend line, and that is an area of resistance, a point where we'll often roll over. So I do think that there's some pretty good risk that we move lower in the near term. It's been choppy on the upside, and we've risen up to what was support, now resistance. That's a good reason also to get a reversal. Remember in recent videos, I think a week or two ago, I talked about the markets holding that monthly long-term trend line. And so I'm not too worried about a bigger correction until we break that monthly trend line. But, we're not out of the woods yet. Although the market is stabilizing, it's far from strong. Looking at the Russell 2000, which is our small cap sector, I have taken here the daily interval, and you can see we had a kind of a parabolic move to the downside. We broke that. We've made a new high here, but broken this little upward move, and that again points to maybe some weakness coming ahead. Until we move through to new lows, I wouldn't get too concerned, but if you're a short-term trader, it kind of looks like the next few days could be negative to the downside in terms of the small caps. All right, let's look at the Canadian markets now. We always start off with the TSX 60 index on the 30-day, 60-minute time frame. Similar to what we see in the US market, we had the downward trend line sort of like that. I didn't draw that great, but you get the idea. And then the upward trend line there, a little bit of a rising wedge, and that's broken. There's also an upward trend line like this. So feels to me like we're more likely to be lower at the start of next week. Looking at this chart with this breakdown this week, it points to that. This isn't a real strong line of support. It's a little bit uncertain how I've drawn that. So I think you got to be a little bit cautious going into next week on the Canadian market. Looking at the longer term time frame, because the Canadian market really hasn't kept pace with the US to the upside, it doesn't also have as much downside to really strong support that is held up on numerous occasions, but we can't argue with the fact that the sellers are in control over the last few months, and therefore again, be cautious. This is a neutral chart because we are in a sideways trading range, but it is far from an awesome looking chart. TSX Venture, this is the small cap or micro cap Canadian stocks. There you can see the downward trend line, and you know, run away, pull back, run away. We pulled up a little bit, but again, there's that weakness right on Friday there, indicating that there's more downside ahead. So, you know, I think that the bias has to be negative going into next week, although not extremely negative, but there is some signs there that we're going to see more weakness. Moving along to the currency market, I always like to take a look at the US and Canadian dollars. Here's the US dollar, which continues to show strength. It's a green candle this week. It wasn't really up significantly, but it did manage to close above its open after some weakness earlier in the week. That is a sign that the US dollar wants to continue to move higher. We don't really have resistance until some resistance there, the most important up here. So there's some pretty good upside until we hit resistance, and I think you have to remain bullish of the US dollar. Can't say the same thing for the Canadian dollar. Of course, it's often inversely correlated to the US dollar. There's one trend line, there's another, and we are essentially in a short-term move to the downside. This is a weekly chart, by the way, 5 weeks of downward sloping action, having broken this little upward move. I think we're going to test the lows here at 74 cents or $74 on the FXC, which is about 74 cents on the US dollar. It's not exact because this ETF is a bundle of currencies, but heavily correlated to the US dollar. Long story short, be cautious, have a negative outlook for the Canadian dollar near term. Interest rates, well, we always explain this, how this works, but this is an ETF that is based on bond prices. And so if this is going down, interest rates are going up, and you can see that we are in a downward trend and that we blew through some really strong support a number of weeks ago, support that had been hit many times. And that points to lower prices for the US bond market, which means higher interest rates. Maybe good for banks, probably not great for the overall stock market. Finally, on to commodities. And of course, gold tends to be inversely correlated to the US dollar. And with that strength in the US dollar, and as the market normalizes a little bit, we saw some selling pressure in gold. I do think that if the market does a little more of a corrective move near term, we could see gold bounce back a little bit, but as long as that US dollar is strong, there's a bit of a headwind for gold. Speaking of headwinds, the oil market has really hit some headwinds and broken that upward trend line. We talked about this last week when it broke the upward trend line, and continued weakness here. I remain bearish of oil. It should find some support in here. It is getting pretty oversold, so perhaps we'll get a little bit of a flush of panic in the oil market, send it down one more week, and then perhaps a bounce back. Wouldn't surprise me if next week we go down to here and then bounce back to close near the top of the range for the week. We'll see how that plays out. So my outlook then, I'm neutral on both time frames for US stocks and Canadian stocks, but given how things went on Friday, I do think we got to be a little bit cautious going into next week. If we get some confirmation of weakness, I would be cautious. Gold, neutral on both time frames. Oil, bearish, but remember, oil is pretty oversold. So stock markets are starting to normalize, but that does not mean the volatility is over. We see signs at the end of this week that we could be in for some more. We want to watch for those intraday trend breaks, so keep an eye on the S&P 500 chart. I like to look at the ETF, SPY. Take a look at that 30-minute chart going back a month and look for trend line breaks as a clue for what the next leg of the trend will be. Gold is stalling in its attempt to sort of strengthen, and I don't think it's got a lot going for it with a strong US dollar. And of course, oil continues to plunge, but it's pretty oversold and due for a bounce, maybe one more big flush to the downside before we get that bounce. All right, let's look at the trade of the week, and this was a short trade. On Friday, my day trading strategy had a short sell bias on the open because of the break of the trend line. And so there was lots and lots of opportunities. This was one of the early ones and one of the best performing ones where we had my action candle there. It's the gray dot on the short side, it's pink dot to the upside. So we had the gray dot on the open, good volume, good price move to the downside. That was a signal to go short of Salesforce CRM, and you can see how well that worked. It bottomed out at a positive 12 RR. Very nice trade. But again, let's use that concept of trend line breaks and realize that there was a pretty good signal to cover that short, maybe around 1110 RR before it bounced back into the close. All right, well, that has been the Stockscores Market Minutes. I hope that you have enjoyed it. Please subscribe to the channel. Click on the alarm button to get instant email alerts. Hope that you've liked the video. If so, click on the like button. But most importantly, trade well.